Welcome to the Did You Know Show. We're going to be talking about taxes. It's tax time. It's time to file your taxes. A lot of people don't want to file taxes because they say they didn't make enough money. Well, listen up. We got some information. You might want to do it because you might get $400 to $7,000 free money, earned income tax credit. Well, what do I have to do to get this? Well, first of all, the information I'm giving you is from the IRS website at www.irs.gov. That is where all this information I got and what I'm telling you. I'm not a tax expert. I do my own taxes. I do my family taxes and friends. Never had a problem. Been doing it for a very long time and a lot of years. So I know what I'm doing. But on top of that, all this information I'm talking to you about today is from and on the IRS website, and that's where you can get that information. All right. So what do I have to do to get earned income tax credit? You must file a tax return to determine your eligibility to claim the earned income tax credit. Many people will file a 2013 federal income tax return, even though the income on the return was below the filing requirements. Listen up to determine if you need to file a federal income tax return or if you need to stop your withholding so you will not have to file an unnecessary return in the future. So like this year, 2014, IRS saying you're not going to get money because there's a delay or some people aren't getting a return. If you take 15 to 25% of your income and put it in a savings account, you can collect interest on that. And then at the end of the year, whatever your taxable income is and taxes you owe, you can simply write a check and pay your taxes rather than filing a return and waiting for them to pay you or not pay you. It's better to have money and owe them than be owed the money and them not paying you. See what I'm saying? All right. So if you do not file, you might be losing out on earned income credit, then that's free money of $400 to up to $7,000. Do you have federal taxes withheld from your pension and or wages for last tax year? You may wish to get a refund back then from that money. And that's an earned income credit even if you didn't pay, okay? Then file to get that refund. If you made a total before taxes, taken out the minimum taxable income or less for that year. Now, if the payment date on your payroll checks were dated between January 1st to December 31st for that last year, even if you cashed a check after December 31st, you waited until January, February, March, whenever, and cashed that check. The date on that check was December 31st of last year, then that's income that you earned for that last year, regardless when you cash the check. Dates matter. Okay. So it counts as earned income for that last year, and you must include it in the total earned taxable income for that year. Do you have earned income tax credit? The answer is most likely yes, if your earned income and adjusted gross income was less than the following. Here's a couple of scenarios. Married filing jointly with 3 or more children, $51,567 or less. If you are single and had 3 or more children that qualify as dependents, you made $46,227 or less. Then you can have an earned income credit coming your way. All right. Married filing jointly with 2 children is $48,378. If you're single with 2 children, $43,038. Married filing jointly with 1 child, $43,210 or less a year, and you qualify. If you're single and have 1 child, you can make up to $37,870 or less, and you can get earned income credit. All right, if you were married filing jointly and didn't have any children, you total income can be up to $19,680 or less. Single, $14,340 or less, no children. You can get an earned income tax credit for last year. Tax year minimum, credit minimum for 2013 was $6,044 with 3 or more qualifying children. Okay, you can get up to $6,044. with 3 or more qualifying children, $5,372 with 2 qualifying children, $3,250 with 1 qualifying child, or if you made the minimum or less, $487 for no children at all. If you have an investment in stock, the investment income must be $3,300 or less for the year for it not to be considered earned income. Okay? So you made less than that, you might get an income credit. If you and your spouse, if filing a joint return, meet the earned income tax credit rules for everyone, and you have a child who lives with you, you may be eligible for earned income tax credit. Your child must pass the relationship and age and residency and joint return test to be qualified as a child. All 4 must be met for each child you claim. Your child must have a social security number that is valid for employment and must pass all the following tests to be your qualifying child for the earned income tax credit. At the end of the filing year, your child was younger than you or your spouse if filing jointly, and younger than 19. At the end of the filing year, your child was younger than you or your spouse if filing jointly, and younger than 24 and a full-time student. At the end of the filing year, your child was any age and permanently and totally disabled. It can be claimed a dependent regardless of age. Child must live with you or your spouse if filing jointly in the United States for more than half of a year, over 6 months, that's 179 days or more. The child cannot file any return for the tax year unless the child and the child's spouse, if married, had a separate filing requirement and or filed a solo or joint return only to claim a refund. So your child worked but got a refund because they didn't make enough money. If your child worked and filed taxes and did not get a refund but paid taxes, then you may not claim the child as a dependent because they made their own money and can support themselves under IRS laws and rules. Okay? But if you had a child and you went out and you made $1,000 for that year, you still claim him as a dependent because he's not living off of $1,000 for that year, just as an example. A child is your dependent if they are under the age of 19 and is your son, daughter, adopted child, stepchild, foster child, or a descendant of any of the such, as a grandchild, a brother, a sister, a half-brother, a half-sister, a stepbrother, a stepsister, or a descendant of any of the such, as a niece or a nephew. Okay, important. Only one person can claim the same child. If a child qualifies for more than one person and one of the persons is a parent or parents, the non-parent can claim the child only if the adjusted gross income is higher than the parent's. If the child qualifies under relative and parent, adjusted gross income rules do not apply. The taxpayer chosen, if more than one person claims the same child, IRS applies a tiebreaker rule. See irs.gov for more information on that. It's called tiebreaker rule. Google that up or search it on the IRS. Don't Google it. Go to irs.gov and search tax breaker rules. If you or your spouse, if you are married and file a joint return, worked for someone, worked for yourself, or had other earned income, you may be eligible for this credit. Taxable earned income includes wages, salaries, tips, and other taxable employee pay, union strike benefits, long-term disability benefits received prior to minimum age requirements for retirement, net earnings from self-employment if you own your own business or a farm, or you are a minister or a member of a religious order. See special rules for more information on that on the irs.gov website. If you're a combat veteran, you might have non-taxable combat pay elections. You can elect to have your non-taxable combat pay included in earned income for earned income tax credit. The amount of your non-taxable combat pay should be shown on your Form W-2 in Box 12 with a code Q, Quebec, Q. Electing to include your non-taxable combat pay in earned income may increase or decrease your earned income tax credit. So seek professional help on that when you go to a tax professional. All right. You can see publication 3 of the Armed Forces Tax Guide for more information. I'm going to post a link up here. Okay. Now, here are some examples of income that are not earned income and are not taxable. Pay received for while working as an inmate in a penal institution, interest and dividends, retirement income, Social Security, unemployment benefits, alimony, and child support are not considered earned income. These are more under a benefit rule, and they're not uh, considered earned income by the IRS and may not be taxed. IRS considers disability retirement benefits as earned income until you reach a minimum retirement age. The minimum retirement age is the earliest age you could have received a pension or annuity if you did not have the disability. After you reach the minimum age, the IRS then considers the payment to be your pension and is not earned income, thus they are not taxable. Benefits such as Social Security, disability insurance, SSI, or military disability and/or pensions are not considered earned income and cannot be used to claim earned income tax credit. You may qualify for the credit only if you or your spouse, if filing a joint return, have other earned income. Payments you receive from a disability insurance policy that you pay the premiums for are not earned income. It does not matter whether you have reached minimum retirement age. If this policy is through your employer, your W-2 may show the amount in box 12 with the code of J, Juliet J. Read more about life insurance and disability insurance proceeds on the IRS.gov website. A qualifying child with disabilities. To be a qualifying child for earned income tax credit, a child must have a Social Security number that is valid for employment and pass all the age, relationship, residency, and joint return test. Your child must be your son or daughter, adopted child, stepchild, foster child, brother, sister, stepbrother, stepsister, half brother, half sister, or a descendant of any of them. Qualifying children with disabilities. There is no age limit, and the child does not have to be younger than you, like as if you adopted a disabled child. If the qualifying child is permanently and totally disabled, okay, you have a child that's older than you, they're permanently and totally disabled, okay, your qualifying child is permanently and totally disabled if both of the following apply. He or she cannot engage in any sustainable gainful activities because of the physical or mental condition, and a doctor determined the condition has lasted or can be expected to last continuously for at least 1 year or can lead to death. Okay? If the qualifying child receives disability benefits, you can still use the child for earned income tax credit purposes. Read more about the additional taxes and test for qualifying children on the IRS.gov website. To prove your claim of this disability child, the earned income tax credit for a child who is permanently and totally disabled, you will need a letter from a child's doctor, other health provider, or a social service program or agency verifying that the child is permanently and totally disabled. A child's income may not be taxed or considered income if the child is working for minimal pay under a special program for people with disabilities, is not engaged in a sustainable gainful activity under the definition of permanently and totally disabled. Work for a minimum pay offered to people with physical or mental disabilities or shelter employment must be offered by qualified locations. Some qualified locations are like sheltered workshops, hospitals, similar institutions, homebound programs, and or the Department of Veteran Affairs, sponsored homes. Now, there is so much more to learn and know, and I highly recommend going to the IRS.gov and looking for yourself. before going to any tax preparer or using any online service. Educate yourself for free, know before you go, and now you know. Thanks for watching the Did You Know Show. Share, like, subscribe, and comment. See you next time on the Did You Know Show.